Livestock markets here in Chicago were sharply lower on Tuesday. A limit down trade across the board in the fat cattle market, another limit down trade across the board in the feeder cattle market, and a sharply lower trade in the hog market. This is just good old-fashioned fun liquidation in the livestock. The fat cattle market and the feeder cattle market have just rallied relentlessly for months up until the last few days, and are now just giving back a lot of those gains in a very, very short period of time. This certainly has something to do with year-end position squaring. It probably has something to do with some of the weakness in the outside commodity markets, the crude oil market, for example, where a lot of fund length has probably lost some money here over the last couple of weeks. So, I still think that moving forward, we've got a strong fundamental story in this cattle market. But for the moment, this is a get me out type trade. We may very well see a limit down trade in that feeder cattle market again coming up on Wednesday. The hog market held together a little bit better, but at the end of the day, succumbed to a lot of the selling pressure that was seen in the feeder cattle market and the fat cattle market. Did hear some rumblings about the PED virus appearing in the Ukraine, which could be a little bit friendly down the road. I don't necessarily know that we've seen the end of that virus, but for the moment, it seems as if we've got it under control. But again, the big story here on Tuesday, limit down feeders, limit down fats, and likely another sharply lower open on Wednesday morning. Again, this is Joe Vaclavik from Standard Grain from the floor of CME Group.